as the stock market is eyeing all-time highs, notice this rising wedge. Are we about to break to the upside or to the downside? Hopefully, guys, we're able to spot the warning signs in the stock market today. Now, before the opening bell, we already had news come out about Trump-China trade deal and such. And right when we got the first bit of news, we saw the US dollar versus Japanese yen go rocketing up. We saw the S&P 500 whip up real quick. And on the live stream, we're like, oh my goodness, what's going on? CPI data is not out yet. And if you guys don't want to miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. Today, we gave away 2 My Funded Futures accounts. And tomorrow on the live stream, we're going to be giving away a Take Profit Trader account. So you don't want to miss the next time we go live. Now, if we look at what was inside the trade deal, Trump says China will supply rare earths in done deal. However, we still have to wait for China to go ahead and approve the deal. At face value, yes, it's probably going to go ahead and get signed off. But what the U.S. is basically giving up in this deal, the U.S. is offering to ease export restrictions on sensitive technologies like semiconductors and software and resume Chinese student visas. In return, though, China is simply recommitted to lifting a prior blockade on rare earth minerals, resources it nearly monopolizes, and that are critical to the U.S. defense and tech sectors. So, is this going to be a good deal or not? And let's not forget that 90-day pause is going to be wearing off a lot sooner than what people think. If we look right here, this morning, we also got news out that EU-US trade talks may miss Trump's July deadline. Now, let's talk about one of the first warning signs we saw out there when we first get the news about the trade deal. Here's that little spike that we saw, boop, and came right back down. How come we did not get any follow through with that news? Why, oh, why did the market come crashing right back down from the spike high that we saw up here? Then today we got more news coming out as well. We had the CPI data coming out. Core CPI month over month came in at 0.1 versus a forecast of 0.3, previously 0.2. Hey, that is great news. And keep in mind, that is great news. Then we see CPI month over month came in at 0.1, forecasted 0.2, previously 0.2. That also is good news. However, we look at CPI year over year, it came in at 2.4. They forecasted 2.5, so slightly better than forecasted. However, it was up from the previous reading of 2.3. Now, when the CPI report first came out, you can see this massive candle that we had up. It was a beat out there. The stock market goes rocketing right up to the moon. So why did we start coming all the way back down? Is this a warning sign? Is everybody too hyper focused on seeing the indices come all the way back up and make new all-time highs? Is the market getting ready to rug pull a lot of traders out there? That's something we most certainly want to take into consideration. Now, when we come over and look at how the indices fared across the board today, the Dow was down 1.1. The NASDAQ was down 99 points. S&P 500 was down 16 points, with the Russell 2000 being down 0.87. However, we look at advanced indices versus decline. It's not as bad as it may look. We see we had 53.7% of issues declining on the day. Then when we come over and look at the sectors across the board, energy by far outpacing everything else, then utilities, then industrials. Every other sector was in the red after that. Now, if we come over and look at crude oil today, this morning on the live stream, we're talking about crude oil making its way up towards the ABC pattern at 69.08. And if we look, we are not that far away. Now, why is this going to be important, right? Because today we talked about, and today we had the CPI data come out. Let's talk about what was inside the CPI report. We can see right here, yes, on face value, it was good. But if we zoom this up, what was some of the takeaways that we saw out here? We look right over here at energy. Energy was one of the negative factors, meaning it was causing a lower reading, followed by new and used vehicles. So what is that going to do to inflation moving forward if indeed crude oil is going to continue to go ahead and rise on the way up? I got to tell you, I don't think it's going to be a good look out here. Then we come over and look at the dollar index. Dollar index looks like it may want to break below this weekly zone that we drew out. However, if that does, if we get a weaker dollar, that would actually favor the bulls out here. Then we look at the 10-year yield, also on the move lower today, which is a bullish sign. We look at the price of gold today. Gold still holding above this upper trend line that we broke out from. We came back to test, and now are we about to break out? Keep in mind, tomorrow we're going to be getting more inflation data coming out at 8:30 a.m. We have the PPI data coming out. along with the weekly unemployment claims. Let me know in the comment section down below. Do you guys think the unemployment claims tomorrow are going to come in hot, meaning it's going to be higher than 242,000? Or do you think it's going to come in a little bit better, and that's going to be the catalyst to get stocks rocketing to the moon? If we come over and take a look at the volatility index today, the VIX actually up 29 cents. A majority of the day, the VIX was in the red. Then we had a late day push, giving the VIX a high of about 18.10 before falling back at the very end. Now, today I was able to qualify 3 150K accounts with Take Profit Trader. I want to remind you guys, they have a 30% sale off all their valuation accounts, and best yet, no activation fee. To take advantage of this offer, use the links in the description box down below. Use code epitome at checkout. Now, if we come back over and take a look at the SPY real quick, we have this rising wedge, ascending triangle, whatever you want to call it. MACD indicator basically flatline. Normally, this pattern will complete to the downside, but are we going to get a false breakup first? Can we come over here and test all-time highs? Notice if we start to break to the downside, one of the first targets I would want to focus on would be the high volume area of the composite profile, 590.48. Then as we go over to the 4-hour chart, you can still see we're just riding that trend line. MACD basically flat line, not a whole lot to see. 30-minute chart though, we have this area right down here, which we still have not come down towards. We still have not filled the gap from last Friday either. And another zone that we want to draw out, and that's going to be right up in this area here. It's going to be a minus development area. That's going to be somewhere in the ballpark of 601.99 to about 602.28. If we start to get in a bounce tomorrow, this most certainly would be a target location I'd want to focus on. Also notice what we've had the last 2 days, the ranges have started to expand. Yesterday's range does not look that large now that we're looking at today's range. But if you look at yesterday's range compared to the prior day, you can see the ranges were expanding. MACD indicator on the 30-minute chart is also bearish, crossing to the downside. Something I warned you guys about this morning on the live stream. If we got back below the high of yesterday, watch out for value area high to get tested. Watch for the point of control, value area low, and even a rerun of the lows from yesterday. Well, we barely missed hitting the lows from yesterday. Then as we come over and look at the futures markets real quick, what do we got going on? Well, you can see we have 2 distinctive wicks right up here at these highs. We basically spiked up. Then this afternoon, we spiked back down below value area high from last week. However, we did close back above it. So tonight or tomorrow, if we start trading below 6,019 and a quarter, I want to look for lower prices. I want to look and see, can we come down here and test last week's point of control at about 59.82 and a quarter? As we come over and look at the daily profiles on the 30-minute chart, notice, we basically had that rip up this morning, a little bit of back and forth before we broke on the way down. We almost hit S1. However, almost is not good enough. We had a range today of 68.5 points. And as we start to look at this, value area low will be 6,015.5. Point of control is going to be about 6,026.5, with value area high being 6,051.50. Now, do not be surprised if we try to run back up. And if we stay above the point of control, I do want to give the bulls the benefit of the doubt that we're going to try to come back up towards this area. Now, if we can basically get back above the wick of this candle right here, somewhere in the price point of 6,041, I then want to look towards value area high. However, if we do get above value area high tonight or tomorrow, and we start coming back down, I'd want to play the rotation on the way down. I do not want to use the point of control as target number 1. Instead, I'd prefer to use right here, basically the candle bodies right up here, as it was a structure point that we broke out from, somewhere in the ballpark of 6,039. If tonight we just simply come down below value area low, I then want to turn my attentions down towards the minus development area that we have down here from last Friday. That's going to be all the way down here at about 5983.75 to about 5974.75. Now, we come over and look at the QQQs real quick. Qs today did close a little bit lower. However, we made a new high today. We did not close at that level. We still have all-time highs just slightly above us. If we go ahead and we grab that real quick and we measure, it's less than 1% from today's high to all-time highs in the market. So are we going to be able to make it up there and take out that level? We come over and look at the 30-minute chart. MACD indicator is crossed to the downside. And if we do get a bounce tomorrow, I do expect we'll come back in this area and trade here just a bit, anywhere from about 532, 8.84 to about 534.08. Now, this could be an area where we simply come up towards, we reject back down, and that could set up a larger ABC pattern on the way down. keep in mind, we still have that large gaping gap from last Friday. And speaking of gaps, before we look at the futures markets this morning, we were talking about the gaps in that Russell 2000. One gap, two gap, three gap. Today was gap number 4. I said highly probable we are going to fill today's gap. Well, most certainly we did. And we essentially made it all the way down, filling the gap from the day before as well. So we were able to fill 2 gaps in one single day. MACD indicator on the 30-minute chart looks horrible at this moment. Now, we come over and look at the futures markets real quick on the 4-hour chart. You can see these 2 large wicks, but then when we came down this afternoon, we are also forming a wick as well. We're basically right in the middle of the range so far this week, which is only 390 points. If we get back below 21,868, I do want to target 21,775.00, which is last week's point of control. Then as we come over and look at the daily profiles on the 30-minute chart, notice where value area low is. It is right below us at a price point of 21,887. We have the point of control, 21,945 and a quarter, with value area high being up here about 22,047.75. So the fact that we're above value area low, if we can stay above it, I do want to target the point of control. Anything above that price point, I want to push targets towards that value area high. We could also use some of these other high volume nodes as potential targets as well. So the first area would be about 21,973. Next area up here would be about 22,014. Now, if you'd like to learn how to monitor your drawdown when you're trading with Take Profit Trader using Rhythmic R Trader Pro, make sure to watch this next video right here.